Welcome to Grow Development's first launch in 2022 of the new fund, Real Income Properties Texas One LLC. I'm Kathy Fedke, co-manager, and I'm very excited to share what we have planned. The disclaimer you've heard before is that this is not an offer to sell, nor a solicitation of an offer to purchase securities. The offer is only made through the Private Placement Memorandum, which you can find on the investor portal. All of the details are there. Read the PPM and the subscription agreement and offering documents carefully. The strategies mentioned here today may not be appropriate for everyone, so always consult your personal tax advisor and attorney to discuss your specific situation. Past performance is no guarantee of future results. Real estate purchases are subject to investment risk, including the possible loss of amounts invested. And of course, while every effort is made to maintain accurate and current information, the possibility of errors and/or updates always exist. So let's get to the good stuff. Today's agenda, we're going to talk about the team running this fund, the market dynamics and why we really love this market, fund details, and then how to subscribe. So first, before we get started, I don't want you to spend time watching this if you are not eligible. So the eligibility is for accredited investors only. That is because we are filing as a 506C, and that's an SEC requirement. I'm very sorry if that means that you're not going to be able to join this fund. Hopefully we'll have another one in which you can participate. But listen, Leah will always be there to help you build a portfolio on your own so that you could become accredited. I am sure she'd be thrilled to do that. And I guarantee she will get you there. So you do need a net worth of over $1 million, and that's excluding your primary residence. There are some workarounds there where you can have an equity line, take it out, put it somewhere else. So anyway, there's ways to get around that, but that is the official SEC definition. Or not both, or you can have an income over $200,000 as an individual, or $300,000 if you're married. And you just need to show your, proof of your income. And that would be in each of the prior 2 years, and reasonably expecting that you'll earn the same next year. And then another new way to become an accredited investor, this is new by the SEC, investment professionals in good standing holding general securities representative license, Series 7, the investment advisor representative license, Series 65, or the private securities offerings, Series 82, would have you be able to invest. Okay, so now I am so honored to introduce Leah Slaughter. If you don't know her already, I've known Leah for, over 10 years now. She's born and raised in Dallas. She should be wearing, a Dallas cheerleader costume because she is probably the biggest fan of Dallas. She's a licensed agent in Texas since 2006 and owns approximately $35 million in real estate. So she knows a thing or two about what she's doing. And she owns multiple companies, including OmniKey Realty. Now, Real Wealth has worked with OmniKey for over 10 years. We have raving clients over there. So we know each other well and know her track record, at least with Real Wealth members. And she's, of course, a national real estate speaker and author. So welcome, Leah.
Thank you. So glad to be here.
Yeah, me too. I know you came to me and said, things are happening. Things are really happening in Dallas, Fort Worth, and that's been true for 20 years. So I wasn't sure if I believed you that it was continuing to grow as you believed it would. And you were right. You were right. You've been right. So I'll just kind of hand these slides over to you to go over your metro. It's better you talk about it than me. So tell us what's going on there. Why should we choose Dallas, Fort Worth, and North Dallas over other metros?
So I think there's a lot of factors in North Texas happening right now that are driving all of this incredible growth. And really, at the end of the day, it boils down to the number of people and the number of jobs moving here. And I think it's hard to really understand what's happening until you look at the numbers, because it's really quite incredible. We went into COVID with massive population and employment growth. And what happened with COVID was this kind of mass exodus from a lot of these larger cities. So for those of you who don't know, DFW, North Texas, we're the fourth largest metro in the United States. And we're on track right now to take over Chicago for the number 3 spot. And we're very unique in one of these very large cities because of where our average cost of living is, our average cost of real estate, and the heightened growth. So the other markets are seeing net population loss and job loss, and here we are seeing the opposite. We actually had the fastest recovery in COVID of any metro area for jobs coming back, and we're way beyond that now. So if you look at this chart here, you'll just see this incredible population growth that we have right now. We grew about 155,000 people last year. And what they're calling for in the next 20, 25 years is another about 3.5 million. And we already have topped. You'll see this here is a recent statistic telling us that we're at 7.7 million and we're already almost to 8.1 million. It's just incredible growth right now. And what we think about when we look at growth like that is, where are they all going to live? So we went into COVID with a massive housing shortage. We were around 40,000 homes shy in 2020. And if you look at that number now, we're over 170,000. And so we are starting less than 60,000 new homes a year, and that number is dropping every quarter. We dropped this quarter compared to last quarter. And so what's happening is there's this widening gap in a housing shortage. And there was a big push to try to fill this with Class A luxury apartments that are very expensive and in the main metro. But the problem is that almost 100% of the employers are going into the suburbs. And so what we are focusing on is the growth in these suburbs. And so, Kathy, if you can go to the next slide, I think that's going to let us take a look at how DFW is comparing to these other large metros. So 4 of the 10 top growing metros are in Texas, of course. DFW has seen the largest growth of any metro in the United States. There's 1,000 people a day relocating to Texas, almost 450 a day to North Texas alone. So we're almost half of Texas's growth. We did exceed 8 million, as I mentioned, and by 2030, they're saying that we're going to be the 3rd largest spot. And I think it might even be sooner at the current rates that we're seeing. Yeah. So if we go to the next slide, you can see here what's happening in our pricing because of this supply shortage. There's just no other way to word it. More people are moving here than there are places to move to. And the other problem is everyone is refinanced and everyone has equity. And so why would you sell to go into an interest rate higher than these 2.7s and 2.5s that we all went into? So people just aren't listing their homes. And so it's a double problem. We're not building enough and there's nothing on the market. And so this problem is just compounding. So if you look at the average price, we've gone up 30% year over year in our median prices right now. That's astronomical growth. So think about it this way. Anyone who owned a home last year made 30% on their money in a year. So it's really incredible, the opportunity if our prices continue going up, which I think just by supply and demand, they're going to, but also because our average price point is still so low. If you look at our most populous county, our most popular county in North Texas, Collin County. So that's where Plano and McKinney and all these cities you see on the news are, where all these employers are going. Our average price point of house is still under 600,000 for the 4th largest metro in the United States. Think about the most popular area in LA or Chicago or New York and what the average price point is there. So it's more than just price growth we're expecting because of the market growing. It's that we're undervalued. And that's because a lot of people kind of put Dallas to the back burner. They didn't realize how mega a business center we were until it was all already happening. And so here we are. Now, to keep up with that price growth, we're also seeing significant rent growth. And so we've had 17% year over year rent growth. Normal in the US is about 2.9%. So we saw 17% last year. So if you look at 17% rent growth, 30% market increase in value of property, it's really just kind of the trifecta of everything we as investors look for. Now, this is what's really interesting. So you've got all these jobs coming here. But what's crazy is the pay these jobs are bringing. Almost half of the new jobs have incomes over $150,000 a year, and less than 17% are paying less than $75,000 a year. Now, if you live in San Francisco, that may not seem like a huge income. for North Texas, that's a huge income. If you think about our most desirable area has an average price point of $575, and the average job coming in, half of them is $150,000 a year. It's really incredible. The cost of living here is so much lower. You get so much more for your money, and our landmass. So we've got the second highest number of highway miles per capita in the United States. And so we're very spread out, and that's why we build in our suburbs as opposed to in our inner cities. So that allows us to invest in a different type of model where the price point's a lot lower. And so for people moving here, what it really means is they can go to any one of these employers and live and work anywhere in North Texas and get there very quickly. While everyone else was trying to figure out what to do in the last recession, we were building our airports and building our roads to stay ahead of the growth. And that's why we don't have those crazy traffic patterns that the other top metros have. That's not to say we don't have traffic, but you can still get 30 miles in less than an hour. And so that's pretty incredible. Now, this is a chart showing you what our rentals are doing right now. So if you look at the green, that's telling you how quickly the rentals are leasing, and the blue is telling you what the average price of the closed leases are. Now, I want you to notice that average days on market is just over 2 weeks. So that's pretty incredible. And that's just a representation of our housing shortage. And that's exactly why we're capitalizing on that. But also you can see that the rent price is continuing to climb, and more expensive properties are turning into rentals. And that's again because of the price increase. Most investors who are having these types of returns on appreciation aren't liquidating right now. We're all holding and continuing to buy so that we can make those returns as the market continues to appreciate. And that's what you're seeing reflected here. So this is just a look at that housing inventory shortage that we talked about. So here are some of those numbers. 59,000 homes started in 2021. There was a massive drop in Q2 this year as opposed to Q1 in the number of new housing starts. A lot of that's because of interest rates and builders not having inventory to build on. And so we're really not fixing this problem. Right as we were starting to make just a little bit of headway to keep up, everything kind of stopped for builds because builders, their build lines just got cut. So they can't physically build as many properties as they could before, and lot values have gone up. And so where they are building is predominantly in the inner cities where things are very expensive. So not really filling the need of these regular workers. So our shortage is over 170,000 homes. And again, as I mentioned, it was around 40,000 just 2 years ago. So it's a real problem. And we actually have more people relocating here now daily than what we even did before. So the problem is really, it's pretty significant. So if you look at the available inventory right now, you'll see that we're at less than half of where we were in 2017. And of course, 2017, we were much smaller. And so it's a problem that's only getting worse. And I don't really know what the solution is to it, because I think that this is going to be a 5 or 10 or 20-year problem. Just the amount of land that we need to fill the population growth was something like 300,000 square. I mean, it's just crazy. And so I don't know where the solution is. All I know is that we're going to capitalize on the problem. So this is kind of showing you all of these suburbs around the main metro where we focus, and these areas are having heightened growth. So if you look at the city of Dallas, it's having what we consider a population loss because of all these people moving into the suburbs and moving out to the suburbs. And that's A, because the jobs are in the suburbs, and it's B, because COVID kind of created this mentality of people wanting wide open space and the big backyards and single family housing, which is exactly what we do. So 21 of our suburbs grew more than 10% during the pandemic. And so it just shows you that there's that push to the suburbs, which is where we are piggybacking on growth. The rent growth is really important to the target markets. We want areas that physically don't have enough properties, don't have enough infrastructure to support the people that are renting. Home price appreciation located off the major highways, physically needing to grow just to support the people there. So they need more schools, they need more grocery stores, they need more roads. And so it's not like the inner city where they can afford to stop growth. These areas have to continue to grow just to support who's there. And of course, we want these suburbs to have their own employment centers, but also be drivable into the mega employers like your Fortune 500s who are a half hour or less away.
And here's the big news.
Yeah, so this is talking about Grayson County, which is essentially going to be your new Silicon Valley. What's happening in Texas is all of these shortages in chips and manufacturing, we are trying to fill the need with new warehousing, new development, new growth happening here. So we started pushing Grayson County about 6 or 7 years ago, talking about Texas Instruments and how we felt that that was going to be the next big hub. And for those of you that bought with us, congratulations, you've made a killing. And now what we're seeing is just more and more growth. So first, we created the largest economic deal in Texas history. It was part of the Texas Enterprise Fund. If you're not familiar with that, go look it up. It's one of the ways that Texas has done what they're doing. It's tax incentives, cash incentives, abatements for companies to relocate here. And a lot of what's happening right now is in this North Texas, Sherman, Denison, Grayson County area. So chip manufacturing, we're going to be the new hub. We're going to be the center of it in the United States and one of the largest in the world. So there were two major deals that were struck. There was the deal that was the largest in history with Texas Instruments, and now Globotech, which is 1,500 new jobs and a $5 billion investment. We're talking about to a small suburb that's 30 minutes drivable into Plano and McKinney. So this is incredible stuff that's happening right now. So they got a $15 million cash grant, and it's going to be $34 million in tax incentives. This is the first manufacturing plant of its kind in 20 years. And this is only the second deal. There's going to be so many to come. You have to remember, these employers are able to go one county out from the main city. They could pay their people the same. They live much richer, and that they can buy this land and build these developments for much, much cheaper. So it allows them to build bigger, bring more people in, make more money. And then the companies that work with them are looking at this and slowly coming here. And so it started with Texas Instruments. Now we're seeing a lot of subsidiaries and companies that they work with, they ship to, they sell to. So Face ID technology, all these things that are happening here in Sherman Denison, it's driving this growth on top of the already heightened growth in North Texas. So it's really just kind of the perfect situation where we want to invest.
And yeah, this is an incredible article. This is brand new information, I think.
Yeah, it is. And essentially they're putting legislation out there that is allowing even more of this development in chip manufacturing and manufacturing to happen. You know, there's been this big push to bring these things back to America, to pull them away from China, pull our dependence away. And I'm super excited that North Texas and Texas as a whole is at the center of that. And really what's happening is a lot of these companies are trying to cluster together because it helps save on costs. Because, you know, when you have a cell phone, a lot of the parts come from different companies that work together on these things. And so that's what we're seeing. But now we're seeing legislation in the Senate that's actually supporting bringing these plants here. And so this is brand new. I think we're going to have major announcement coming in the months to come. And we're certainly looking forward to seeing that growth continue.